Hi, everyone. My name is Tal Brody. I am the Director of Finance at PassiveInvesting.com. You probably recognize my face by now because this is our third tax season together. It is the exciting time of the year for my team and me, and it is a great opportunity for us to educate those in the community and in the industry, and also just share some behind the scenes updates and expected deliveries dates for the K-1s. So I'm going to share my screen. The topic of today is to go through the K-1 delivery timeline. I also just wanted to share some background on our filing requirements and what we've been doing with our tax teams, just to give you some insight. So thank you for joining me today. To kick us off, wanted to highlight the various tax return types and the due dates that are required by the IRS. So the first two are the partnership and S Corp returns that are due March 15th with the extended due date of September 16th. And then you have the individual single member LLC and C Corp returns that are due April 15th with an extended due date of October 15th. So as a reminder, a real estate return would be in the form of a partnership. So I know we still get questions from some of our investors like, when are you issuing my 1099? So again, learning opportunity here that when you sign that PPM, the operating agreement, you are becoming a partner in our entity. So typically that's in the form of a limited partner. And we will be issuing you a K-1 from our form 1065, which is the required form that we have for these real estate partnerships. And because those real estate partnerships are pass-through entities, all activities, so all of the income, deductions, losses, credits, all of that is passed down to you as the investor, as the limited partner of these partnerships. So no, we will not be issuing you 1099s. All of your activity, including your losses and your distributions, will all be included and disclosed on those K-1s. So just a reminder there. So this is our behind the scenes. What has PassiveInvesting.com been up to? What is the flow with our tax teams? We typically start the 2023 tax process around Q4 of that year. So in early Q4, we met with all of our tax firms. Right now, we're using 3 different tax firms for our multifamily tax returns, as well as some of our other businesses. So we have these check-in calls with the teams. We provide any updates and as far as scope as compared to the prior year. So any acquisitions, any dispositions, any significant changes. So if we had renovations or we had a new cost seg done or changes to the ultimate structure of the deals or cap table, that's when we would share those updates. Once we get the scope defined, we work through the engagement letters and sign those. And then our goal is always to provide as much information to the tax teams before year end as possible. The second we get into 2024, the tax teams really pick up. So we front load as much work as possible because typically November, December are a little bit slower for them as they wait for those year-end financials from all of their clients. So we start by exporting all of our investor rosters. So if you're one of our investors or partners, you probably received a message from us saying, hey, check IMS, validate the information, verify that the investing entity is the one that you expected to see in the cap table, verify the tax ID number is correct, take a look at your distributions, just do a benchmark to make sure the information you see housed in our database is correct, because that's the information that gets exported into the rosters. So that roster details the partnership, the class, the investor, so that would be the individual's name or the investing entity, the entity type, so if it's a single member LLC, who the ultimate beneficial owner is, or if it's a partnership, that would be labeled therein. Also the tax ID, the contributions, distributions, ownership percentages, all of the information that's coming from the cap table that ultimately gets fed into your K-1. So we'll export that in final format around December, and then we'll just verify that there have been no changes as of 12/31, primarily related to any new contributions or distributions that may have occurred, since we do typically get our investors to review the investor information on the front end. Another thing that we try to get to the tax team as soon as possible, and this could even happen prior to Q4. It usually happens around the time that we actually close on a property. So that would be any formation documents like the SS4 showing the EIN number or the certificate of formation, any operating agreements, and closing statements for all new acquisitions or dispositions. So that's all in Q4 to front load the tax prep process prior to year end. Then January comes and the tax team is working through importing those investor rosters, validating the investor information. So they do a cross check against the prior year roster to make sure or to identify any changes that may have occurred. So that could be the investing entity, changes to the tax ID, changes to the ownership percentages. Typically there are assignments of interest that happen throughout the year. So that's verifying that they have that form that shows that the original investor did assign that interest to the new investor. And then they use all of the activity to input into their tax software so that the capital balance can be rolled forward for that year. So showing the ending balance plus any contributions, less any distributions. Then after they get the financial statements, it will include any loss or income, and then that will ultimately equal the ending capital balance. So then around the second, third, and fourth weeks of January is when we start sharing our year-end financials with the tax team. So as a reminder, we do use a third-party property management team for our multifamily assets. So they work on closing the books, preparing those financial statements, and then they send them to our team for review. And then once those are final, they are sent off to the tax team. So immediately when the tax team starts receiving those financials, they're importing them into their software, and then the questions start coming. So now we're in February and they're fielding all the questions, getting verification on certain expenses, making sure they have all the information, making sure everything ticks and ties. I usually get like anywhere from 5 to 10 emails from the tax team a day just to verify that they have all the information that they need. So currently, as we enter the end of February, we've received almost half of the drafts of our tax returns. We're working through those reviews, and we will continue working through any discrepancies or issues or questions until those are resolved. So then that gets us to our expected delivery timeline of March 2024. So like I said, we have most of the drafts and we've reviewed them and we're working through those discrepancies with the tax team. So once we get those finalized versions back, then we will start uploading them to IMS. So we anticipate the first tranche of K-1s to be uploaded around the 1st of March, and then we'll continue to upload them throughout the month. So we anticipate to have all of the K-1s uploaded by the end of March. And then just something to be mindful of, the House did just pass the Tax Relief of American Families and Workers Act of 2024. That bill is now headed to the Senate. It may or may not be looked at before the partnership tax filing deadline of March 15th. So that being said, we will continue to monitor it. And the reason it is important for you is that it's new bipartisan legislation. It includes proposed changes to reinstate the 100% bonus depreciation deduction for qualified property placed in service. So if the Senate passes this, then they will issue an update to all the tax software. Our tax teams will update the tax returns, and then we will file a superseded or amended return if necessary and reissue the K1s. We're not going to change anything about the timeline for the current K1 issuances. We're still going to finalize the returns based on the current legislation, but this is just something we are monitoring, and we are we'll keep you posted if there are any changes. Lastly, just things to keep in mind when reviewing your K1. Once your K1 is delivered to you, I can't stress enough the importance of reviewing it immediately to verify the accuracy of your personal information. Start with, are you invested in that partnership? Do you recognize the entity name? Is the name included on the K1 is that what you intended to invest through? And is the tax ID what the correlated tax ID for that investing entity? The sooner you identify issues, the more likely it is that we'll be able to push through adjustments. I can't say that that is guaranteed, but we will do everything in our power to try to push through any changes if you alert us soon enough. Last year, we gave all of our partners at least 2 weeks to review their K1s and identify any changes that were needed. Usually this comes through in the change of, or the form of, the retirement box wasn't checked, or this is a checkbook IRA and my social security number is listed, or something like that, that could be fixed if you let us know immediately. The longer you wait, the more cumbersome or cost prohibitive it is for our team and our tax team to push any changes through. Something else to consider is any assignment of interest that you may have had throughout the year. The way we show this is you would be issued 2 K1. So say you transferred your interest from one entity to a new entity during that year. You would be issued a K1 for the original interest that would show your capital balance zeroed out. And then you would be issued and then on that K1, it would say final K1 because you've transferred your interest away from that entity to a new entity. And then the second K1 would be the transferee, and that would show essentially the allocation of your capital from the old interest holder to the new. And that would be the K1 that you would be issued in future years. So just something to keep in mind. There's always a risk there that the assignment of interest wasn't processed properly or may have been missed. So just make sure that when you're receiving your K1, that it's in the name of the transferee. And yeah. Next, these K1s are meant to be used to report your income or losses on your tax return. That being said, the amount of loss that you may claim on your tax return could be less than the amount reported on your K1. And it's your responsibility to consider and apply any applicable limitations, and it's just based on the basis limit for that year. What we say and what we really stress is the importance of keeping track of all of your losses to ensure you're carrying them forward and utilizing them to offset your income in future years. So that's something as simple as an Excel spreadsheet. You have your columns for each year, and then in the rows, you would just list out the various activity. And that way you have essentially your own roll forward for that investment to ensure that your CPA or you are applying those losses and you're not losing them. Lastly, rather than digging into every section of the K1 as I've done in this time last year, I do have an introduction of a K1 webinar that is recorded and available on YouTube. I dig through literally every single section. I go through considerations, pitfalls that we've seen, things to be aware of, helpful tools and resources. So I highly recommend checking that out if you haven't already watched it. And it's a great tool. And if you have any requests or preferences on deeper dives or specific nuances of the K1 that you would like to be addressed, I'm happy to do a introduction of a K1 2.0 in our next webinar. So that's all for me today. I really just wanted to give you the timeline so you knew when to expect your K1s and give you that behind the scenes glimpse of what we've been doing to get those tax returns out the door and K1s released. So at this point, I will open it up for any questions. And if there aren't any, then I will jump back into tax prep. So there is a question in here for a single member LLC filing as an S Corp, I think is what you're asking me. What is the appropriate date deadline? So if you go back to this tax return due date tab that I had in here, the S Corp filing deadline is March 15th. That being said, you had to file, there's a certain form that allows you to essentially report your single member LLC as an S Corp. So check with your CPA and make sure that form is filed. I'm blanking on the form name at this moment, but unless you file that form, then your single member LLC will be treated as a pass-through entity, and it is due with your individual return on April 15th. Form 2553, I think that's it. Yeah, so just make sure you file that so it's actually taxed and treated as an S Corp. No problem. Okay, great. I guess y'all want me to go back to preparing tax returns. It was great talking to all you today. Feel free to reach out. You know where to find me, and I'm sure you'll hear from me again soon if we don't talk before then. Okay, well, goodbye everyone. Have a great day. Happy tax season.